Right, good evening and welcome to the Stage Analysis Members Midweek video. It's Wednesday the 4th of May, just moving into Thursday here in the UK, so it's quite late now. But I did run over a little bit tonight with doing the watchlist posts. Obviously, it was Fed day. It was obviously an interesting day with a lot of stocks moving. So there was a bigger list of stocks to go through tonight to actually try and cut it down to the final watch list. I think it went for about 700 charts tonight, so there was lots of movement in the market, which, as we can see, if we're going to start off tonight with the midweek video to talk about what's been going on in the major indexes today and the last few days before we get into some short-term market breadth, and then finishing off with the some of the watch list stocks from today and the last few days. So I'll start with the S&P 500. So I talked about in tonight's post about the fact that obviously the Fed made a decision today to raise interest rates, which sent the market higher in the final few hours. Whether it's sustainable move or not is yet to be seen. We've literally got just the first part of a potential stage one base forming on the intraday chart. So if we use a multi-time frame approach on this, so this is the 2-hour chart, we've got our daily chart, which has been showing the potential spring attempt since Monday, which I highlighted on Monday's post. So this is day 3 of a potential spring attempt in what would be phase C on a daily chart. And on the weekly chart, you can see we've got this large stage 3 range that's been forming for the good part of the last year now. So didn't obviously see that it was stage 3 until later in the year, November, December time, once we got this change of behavior. And then we had a potential stage 4 breakdown attempt last week, which could, with this week's action, could well be a failure again. We've already had a few failed stage 4 breakdown attempts, so this could be yet another failed stage 4 breakdown attempt. But obviously that's yet to be confirmed. So all we've got at the moment, if we go back down to the intraday chart here, is the first part of what we call phase A of a stage 1 range. So basically, by combining Stan Weinstein's stage analysis method and the Wyckoff method, you can use the phase analysis from Wyckoff within the stages. So within a stage 1 base and within a stage 3 range, you can break it down into the Wyckoff accumulation and distribution schematics. So using the Wyckoff accumulation schematic, you start with a selling climax, so you get the first event, and then we move up into an automatic rally, which is the second event, and then once that tops out, you then potentially get a secondary test before then moving off into a testing phase. So typical Wyckoff structure, as you come down, you get a selling climax, automatic rally, secondary test, and then start to move into some kind of testing before maybe a spring, and then a potential move up and out, and then start to move up and out again. So it's this kind of structure, your typical kind of structure you're looking for in an accumulation schematic. So at the moment, we've just had a selling climax and a potential automatic rally. So where we actually end with the rally, how far it gets, obviously you don't know until that starts to turn back on itself again. But at the moment, we could still be obviously in the lower part or further up in the rally. We don't know. So obviously the next event, if this is the case, if we are just in the early part of stage 1, would be for some kind of pullback within the range again. So we could obviously pull back into the potential the short-term moving averages here, so they could start to move up, start to cross over. So we could get some kind of pullback event within this kind of area in here. But obviously this is not suggesting that we've already made a top. We've obviously got 3 with today's move. Although there was a huge amount of volume in the last few hours there, it couldn't actually break these 2 previous levels here. So it's potentially like looks bullish but acts bearish type bar. as it couldn't actually make a solid breakout move through these previous resistance areas. Although, obviously, on the bullish side of the ledger was the fact that it was a 3% move on the day. So it was a big bar, but it didn't actually clear any major levels. So hence, we've got a change of behaviour over our previous rallies. So we've had these previous moves have all been fairly muted compared to this one. So this is the biggest move we've had within this stage 4 downtrend on the intraday chart here. So hence we've got a change of behaviour going on and potentially are moving into stage 1. So as I said, we're looking for the stage 1 range to develop and start to form the various events that we look for and see if it's an actual accumulation structure or not, or whether we've just made another move to give the large players more liquidity and then for a potential continuation move lower again. But we will see on that. As I said, on the daily chart, highlighted on Monday the potential spring attempt again. So we've got yet another spring attempt here. All right, undercut the low, started to move back through again. So you've got that's a potential early entry point there on the Wyckoff method in phase C. So it's your first entry point. So the next entry point would be looking for some kind of pullback following the spring. So when you get a spring, the pullback event, which is called the test, we'll be looking for a test to develop. So we've moved up towards the 21-day moving average. So again, looking for some kind of pullback on lower volume to then form a higher low, and then the move out of that is a further potential entry point on the early using the Wyckoff method. However, obviously this is a fairly weak base structure at the moment, and as we've said on the weekly chart, we did have a stage 4 breakdown attempt last week. So at the moment we're still in a pivotal area here. This week is a key test of demand, as the stage 4 breakdown hadn't actually convincingly broken down yet last week. It was still had an area of support to get through, which it's rebounding at now. So if we can start to move back up on the weekly chart, back through these short-term moving averages, back through the 30-week moving average, and then start to hold back above that again, then obviously that would be potentially bullish, and we'd be looking for a move back up and out above the short-term range that we've been in for the last 3 or 4 months now. So, but again, at the moment, we're still early days within this, and it could easily roll over again and then make a stage 4 continuation breakdown move there, as we're still underneath the 21-day moving average, the 50 and the 200-day moving average on the S&P 500 here. We're still, what we got there, 4% to the 200-day moving average. But there are some bullish signs in terms of the breadth as well. We've got some short-term breadth bullish signals with the move out of the lower zone back through the key 30% level and breaking the lower pivot. So that's the percentage of stocks above their 20-day moving average. I'll show them in a little bit more detail in a minute, as there's multiple with the NASDAQ, the NYSE, the S&P 500 and the small caps all moving through their 30% level today. Look at the NASDAQ, similar type of move, but doesn't have the same kind of relative strength as the S&P 500. The S&P 500 was only, 4 or 5% from its 200-day moving average. You see the NASDAQ composite here is still 12% below the 200-day moving average, and then had a much deeper undercut of the recent lows. So still had this declining kind of pattern that it's been in since the November top. So I've been forming a range, but it's been a much weaker range. So potentially this could still roll over here. We're still underneath the declining 21-day moving average and the 50-day moving average, which would still take another 3.5% or so to get back up to the 50-day moving average. And as I said, about 12% or so to get back up to the 200-day moving average there. So still a lot more work to do in the NASDAQ, but obviously again, making a potential spring attempt over the last few days after a sort of a terminal shakeout type move underneath the bottom of the range. So it could hold, but at the moment it's still guilty until proven innocent. Same with the Russell 2000. Again, a little bit more relative strength than the NASDAQ. It's come back into its range. Hasn't had that declining pattern that we've seen in the NASDAQ there. The NASDAQ's been by far the weakest recently, although this did break down into stage 4 much earlier. So The Russell 2000 has been showing a little bit more relative strength recently, but again, this phase C type pattern that I talked about earlier in the video. So we've had obviously original selling climax into an automatic rally, secondary test, and then some testing. We had an up thrust. We've come back down. Now we've got potential spring type action. So be looking for a higher low test and then a move back up and out of the range to then hold above and start to form up before moving up and out. So you'd want to see that hold top of the range, this whole structure that we've been in for a while now. So you'd want to see it hold above that area if we did get a move like that. Obviously, we could still quite easily roll back over again here and go off for a stage 4 continuation breakdown. So obviously, nothing's ruled out here. All we've got is a 3-day rally attempt, which hasn't yet confirmed anything really. It's just the very, very earliest entry point you possibly could attempt. But it's obviously a positive sign that we're seeing some short-term breadth improvements in multiple breadth indicators, and also some groups that have been oversold starting to have some bullish percent index breakouts as well. So I think we moved to bull confirmed in a few of the beaten down groups, and bull alert in a few too. So like semiconductors, autos and parts, I think went to bull alert today. And a few others that have been in the lower zone for a while now. So it's good to see a few of those starting to improve. In terms of actual groups, as I said, there's been some of the beaten down groups, like the software names, where you've had some extreme moves over the last 5 or 6 months or so, with stocks declining by 50 to 70% in some cases, and more even. But the actual group, this is the industry group. Say here, if I mark up the base structure here from the 24th of January low there, so you can see the kind of structure it's been in. It's been quite weak. We've got the secondary structure there. Missed that bit. Starting to form, so it's attempting to hold the lows of the structure and attempted to come back in. So we've got this spring and test type pattern forming again. It's a bit of a weak spring and test type pattern compared to what you'd like to see. You'd want to see stronger than that. It still hasn't got back through this 21-day moving average area here. So looking for this to get back through these short-term moving averages here and start to hold above, potentially get back up and out of the range and through this 200-day moving average, and then start to hold above for this to get a bit more bullish again. However, as we've said with the others, we're still at the lower end of the range, could quite easily break down here. We're still, if you look at it on the weekly chart, we're still in the early parts of a stage 4 decline here, so this could quite easily make a stage 4 continuation breakdown and continue on down lower. But it is potentially attempting to hold here. So as I said, if we can start to get back above these short-term moving averages, the 4,900 and 5,000 kind of area here, back above the 50-day moving average, and then start to make some progress back up towards the top of the range, then that would be a potential positive for various software names. And as we see today, later in the video, there was a few software names starting to come back into the watch list today. It was one of the areas in focus today. There's a number of stocks started to show up from the group, as well as a few other areas. So semiconductors also with a shakeout type move, what we call a terminal shakeout, which is the spring number 1 type event if you're using the Wyckoff method of the base structures. So just coming back into the base today, so it's a potential entry point there today, coming back through the base structure for, like I said, very earliest attempt. Potentially needs to do a lot more though. So again, we've got the 50-day moving average up and the 200-day moving average still ahead. So areas of potential resistance to work through here. We need to see this make some progress back towards the upper part of the range and to get back above these short-term and long-term moving averages, and for those to start turning back up and getting back in the right order, as you want to see the short-term moving average above the medium term and then the medium term above the long term. So at the moment they're in the wrong order. So we need to see improvement in that. And again, in early stage 4, but could be attempting to fail on that. So we've got this shakeout type move. So, but could still roll over here. Could still make the stage 4 breakdown completely. Start to move convincingly lower, but if it can hold up here and start to get back up in the range, as I said, if it can start to move back above the 30-week moving average there, then start to hold, then you could potentially move back off into stage 2 at a later date. But potential early signs of improvement here. As well as renewable energy was another one I wanted to highlight. Again, coming up in the watch list today with a few stocks, and over the last few days, I think I highlighted Jinko Solar yesterday, which had a strong move today. Actually broke out of its near-term base structure, and a few others have come up as well. But the group as a whole, you can see some improvement today, again back through the 21-day. Still underneath the 50-day moving average here, and we're still underneath the Mansfield zero line. So relative to the S&P 500 at the moment, there's still a little ways to go to the 200-day moving average there. So this relatively weak group, only 6.6 on the SETR score, obviously could do with a lot more improvement. Still in stage 4 here, but could potentially be showing signs of starting to form an early stage 1 base here, but needs to do a lot more still. As I said, some short-term improvements in the group that have been starting to show up in the watch list. So just wanted to highlight that one. And then finally, in this segment of the video, we've got the VIX. So came off quite strong today. We've got a significant reversal bar type move back down lower. Obviously similar to what we were seeing in the price action with the S&P 500 here. As we've talked about on multiple videos here, it's still in the dangerous, difficult environment above that 200-day moving average. So until we get below this 200-day moving average area here and we start to trade in this lower zone down here then potentially we're still what we consider a difficult environment. So in order to be in a more favorable environment on the long side, we need to be below that 200-day moving average, and obviously ideally much lower below the 20 level. So at the moment, we remain in a difficult environment, but definitely volatility came off a lot today with this potential spring type action that we're seeing here. Right, let's move on to the next part of the video, which is the short-term market breadth.